X1 is now finally step by step being rolled out to Mainnet. Our mission is to provide decentralized, censorship-resistant infrastructure that empowers freedom to transact with minimal technical and economic limitations. And that might sound like something every blockchain would say, but our empirical stress testing of more than 15 other blockchains proves that they are fundamentally wrongly configured to maintain the ethos of crypto and scale under heavy load. And given misaligned incentives, we would argue it's next to impossible for them to change that at this point. And this is why we're now very confident in our solution X1. X1 is a high-throughput, monolithic, general-purpose Layer 1 blockchain optimized for both high performance and high censorship resistance. We're offering speed-of-light transactions at very low cost, even under very heavy load, and with an ability to actually scale. X1 is a fork of Solana built on the Solana virtual machine, fully compatible with the Solana Rust codebase. Every dApp that works on Solana will immediately work on X1. All developers have to do is switch to the X1 RPC endpoint, rpc.mainnet.x1.xyz. The consensus mechanism is proof of stake, but the biggest core fundamental differentiator of X1 versus most other blockchains is how we are optimizing decentralized participation on the consensus layer. On X1, validators aren't burdened with high staking requirements and don't pay for consensus votes on the leader proposed block. And this drastically lowers the entry barrier for participation, and we can therefore expect our consensus layer to become huge. But we're also introducing mechanisms to counteract proof-of-stake centralization with an anti-collusion protocol combining stake, performance and randomness for eligibility in the leader schedule. This is how we can ensure a very strong censorship resistance through a highly decentralized, anti-colluding consensus layer. But not only that, this of course equalizes the access to the block rewards to the whole validator set and not only to stake-heavy nodes. We therefore minimize barriers for not only voting, but in particular block production for an holistic participation in consensus. No other chain gives you this opportunity to join at the core of the chain. They're either permissioned or have a very high economic technical barrier. Instead, they are destined to become more centralized by existing actors. So when we talk about the freedom for a user of the network to transact with minimal technical and economic limitations, this is enabled by the high-performance virtual machine, the protocol design including the validator financial structure and block space pricing, together with the freedom for anyone to be able to participate in that infrastructure. We then gamify the validator participation and see validation as the first DeFi on the chain. The validator hardware requirements are mid-tier. You need 24 threads and 3 GHz base clock speed for the CPU, 120 GB RAM and a 4 TB NVMe disk. You can get one of these bare metal servers for just about $5 to $7 per day, which is the only operational cost you have as a validator. So if you can get a hold of a server with these specs, you can have your validator up and running in minutes and participate at the core of X1. As for throughput, we utilize parallelization with initially 4 threads expanding to more on the roadmap with stablecoin and peer-to-peer transfers in separate threads to ensure quality of service, even during extreme high block space demand. Blocks are quantified into 48 million compute units targeting slot times of 400 milliseconds with an epoch length of 24 hours. The native token for X1 is XNT, the X1 network token. The initial supply is 1 billion XNT. And as for pricing of block space, the fee model is a combination of an Ethereum EIP 1559 style dynamic base fee, which is set by the user's actual compute unit consumption and current overall usage of the chain, and priority fees utilizing local fee markets for fair auctions enabled by the multiple threaded architecture. The inflation schedule is inherited by Solana with an 8% initial inflation distributed through vote credits, reducing with 15% disinflationary rate down to a 1.5 long-term inflation, deflating through 50% burn of both the base fees and 50% of the priority fees. Our fee model then ensures that we can have 100 times more deflationary pressure given that users pay a fair share of block space, and given that the base fee is not fixed, we then prevent spam on the chain and the player versus player Moloch situation we see on Solana today. But given that the value of XNT will be substantially lower than Sol, transactions fees can be expected to still be incredibly low. The consensus value loop is simply then that transactions generate fees, of which 50% are burned, which reduces supply, which leads to a higher token value, a higher validator APY, which leads to more participation, and as the network grows, the network gains more value. We are very confident in our choice of virtual machine. The SVM architecture aligns with Solana's vision of pushing technological boundaries rather than just simply expanding horizontally through layer 2 solutions. Furthermore, our protocol design changes removes the barriers for growth, allowing us to scale with high performance without compromising censorship resistance. So that gave you a summary of the X1 blockchain features, and you can read more about them in our white paper on x1.xyz. and there you can also find our docs page, docs.x1.xyz. Alright guys, let's move on. So now let's talk a little bit about Mainnet. On October 6th of this year, we initiated the mainnet rollout of X1, phase 1, and within about 24 hours we already had almost 500 validators onboarded, and as of now that number has grown to almost 800. And that is more than 50% of Solana's validator network already. This not only shows the strength of our huge community, but also the agility by individual validators to that fast be able to handle the transition from testnet to mainnet. Our validator army are very competent and knowledgeable about how to manage their validators. What we collectively demonstrated here is the immediate decentralization of the consensus layer from day one, forming one of the largest, if not the largest and most distributed validator sets at Genesis in blockchain history. We are for sure the biggest Solana SVM fork today. Validator participation is low barrier, it's open, it's permissionless, and it's globally distributed. We have operators from more than 40 countries already, and this is what helps to ensure censorship resistant, that no single entity or cluster of colluders can block transactions or control state updates. We also ensure liveness. The globally decentralized distribution of not only voting nodes but also leaders makes sure that the network stays up. And let's parallel this to the shitty L2s, who many of them went down when AWS went down the other day. Those are not blockchains. Those are incestuous server circle jerking clusters of TradFi with Web3 makeup. And furthermore, we get more and more signs that Ethereum not only cannot scale the L1, latest Dankrad, who are working on the scaling of the L1, got sniped by Tempo. Base is continuing to dominate the L2 space, but good luck in participating in the Base consensus, because there you're a consumer and you don't want to be a consumer, do you? So X1's low-cost participation and open tooling means that anyone can validate, build and transact cheap, fast and secure on X1. These validators are the core of the chain. They process transactions, they build blocks, and they find consensus at lightning fast speed. Guys, I haven't even scrolled through a third of the whole validator list and my scrolling finger needs a holiday, but let's look at the network speed. Here we can see that the average slot times are less than 400 milliseconds. Again, we are a high-performance chain, able to process transactions at the speed of light. We can expect the average block time to be slightly more as we get more users transacting on the chain, but we should be able to maintain at less than 400 milliseconds on average. We will dive deeper into validator financials and more metrics to look at a bit later on in this video. But Mainnet is currently live, but only as the initial first step. XNT is not tradable just yet. The objective of launching Mainnet in various steps is because we want to build trust to trustless function and not hype. X1 infrastructure has the potential to host billions and trillions of value, so we need to make sure that the foundation is rock solid before public inflow. We are now in the process of optimizing the core functionality of the chain before we continue with the rest of the rollout. This also gives validators a chance to test their latency, their network sync, and leader rotation under real conditions. It also gives us and the team time to verify that the core functionality actually works. We monitor validator diagnostics, we look at things like vote credits, leader performance, and gossip latency. We optimize our own node infrastructure, delegation program, and all other infrastructure level functions that needs to be flawless. In parallel, we are working on both interior infrastructure and exterior partners and solutions. So we're evaluating what parts we do in-house versus utilizing. For example, like bridges like Wormhole or Layer 0 and solutions like S-Bridge versus being able to do our own bridging for simple key functions from early on. Jason is preparing XDEX, token launcher, wallet integrations, wallet development. We look into perpetual and prediction market platforms and other DeFi foundations and analyze how they would interact with the chain. We're working on staking, token incentives, coming early token liquidity event, etc., and all those other things that when a user onboards can expect to have functioning early on. Launching a chain is a very complex process and many things can go wrong. There's always things that are next to impossible to predict. We did, for example, have a misconfigured node at Epoch 9, which caused a slight rollback. The chain had to reboot and validators re-onboarded within hours. Again, this showed the agility of our community being able to do that. So we have a lot to continue to work on right now, and the rest of this video will talk about the things that we already have in place or are working on with very high priority. Now let's check out some explorers. If you go to explorer.mainnet.x1.xyz, the explorer is the transparent view into the chain. There we can see what really goes on. Here we can, for example, see the first block that happened at slot 1 at epoch 0 on October 6, 2025 at 1913. A truly historical moment. On the Explorer, we can see that we have a circulating supply of 1 billion, so 100% is currently circulating. Most of the treasury funds is now actively being staked through the X1 stake delegation program, which I'll explain to you in a little while how that works. We can see that the current slots are increasing with 2.5 per second because we have 400 millisecond slots. The block height, though, it's slightly lower than the amount of slots. And why is it so? Because you have to separate between slots and blocks. A slot is an opportunity for a leader to create a block, but sometimes the leader does not create a block for various reasons, and that's why we have this discrepancy. We can see that we have the slot time average of 370 milliseconds. The current epoch is 31, and we haven't been live for 31 days, and we have 24-hour epochs. So how does that make sense? And that is simply because during the launch phase there is a warm-up period where the epochs are slightly shorter, but we are converging up to 24-hour epochs. We can see the epoch progress and the epoch remaining time. Here in the live transaction stats, we can see that the transaction count is ever increasing very fast. And of course, this is not user transactions. These are a majority vote transactions. All validators are actively voting for each produced block by the leader. So TPS being around 2100 here does make sense if we have 800 validators, since there are 2.5 slots per second. You will now argue that these are not real TPS. TPS should be a metric comparable to other chains, indicating real usage of the chain and not include consensus. And this has been a major FUD point for Solana through the years, and there is logic to that. For sure, we will present both consensus TPS and all others separately in future updates of this Explorer. But from a technical point of view, it does make sense to have this consensus metric to measure the load on the chain. And also, since we are viewing validating as the first DeFi of the chain, as validators essentially mine for credits, we do see value in the growth of the network, and the current TPS is at the same time a metric on its own of adoption. Here in the validator tab, you can see a list of all validators, but of course you can also find this on x1val.online, and big shout out to Leo Trulli for creating this incredible dashboard, which has been incredibly useful. OG Buddyson has also created another very cool dashboard, which you can find at explorer.40blockswithx.com. And I really love this dashboard. Here we can see some key block slot and epoch metrics. You have a network node distribution, you have a validator map, network performance and TPS, a network health monitor, and recent blocks and transactions. Something I want to double click on though is in here in analytics and fee tracker and burn analytics. This is of course under development, but this is great. It's incredible valuable ratios to keep track over time, especially since burns are tied to the overall supply balance and 50% of the transaction fees burn XNT. What we spent a lot of time in our research last couple of years is the importance of corrective pricing block space. We've seen not only chains completely fail, and we might have helped them to do so or completely taken over their entire networks, or at least encounter substantial amount of negative externalities from not having a good pricing model of block space. We differ from Solana here by taking the best from Ethereum, which is EIP 1559 with a dynamic base fee, and this will allow us to become 100 times more deflationary than Solana is today. So when we get a lot of usage of the chain, and since we are the creators of the most used and transactional intense financial application in crypto, which is Zen, I'm sure we will figure out how to get a bit of usage on X1 as well. I do also recommend you listen to my talk at Protocolberg in Berlin earlier this year, where I detail our journey through the chains and why we chose SVM, and how our pricing model based on this empirical research is a combination of Solana and Ethereum pricing models, and you have that link in the description. The second thing I want to double click on is here in the network stats. Because the first pillar of decentralization is the consensus layer, and we have optimized for that. We will not only get a huge consensus layer, but we can also make sure that they get a fair chance to get part of the block rewards. And with time, we can amp up this Nakamoto coefficient here to blockchain infrastructure all-time highs. The second pillar is the network layer. There's no point that everyone hosts the servers at the same provider, because if that provider gets an outage, which did happen the other day with Interserver, then the whole chain goes down. This is another reason why L2s are a scam, because when AWS also went down the other day, many suffered severe outages. When the consensus layer is highly centralized, then the network distribution, of course, is also very limited. But it's very cool to see that we already have a wide distribution of providers. Currently, there's 15, and that already is great, I think. Of course, by now we have an overrepresentation on Interserver. 30% is way too high of an exposure. But of course, it was also perfect timing for just Interserver to have an outage to raise awareness of this centralization risk the other day. We do have plans to put in centralization mitigation mechanism incentives to make sure that also the network layer becomes more decentralized. And this is something that we also then can manipulate with the stake delegation program, which I will talk a little bit more later. So check this provider distribution and maybe go with another provider than the most exposed one for your next server. Another stat page is x1galaxy.io, made by another OG, Obi-Wan. He also made a store here where you can get some merch and validate with style. Guys, we love to see these dashboards being made. A lot of data for us to crunch, and they're really helpful for everyone to see what really happens on chain. So now let's get an updated look on the validator financial. This schematic presents the economic flows affecting the individual validator. So you get a server from a hosting provider to run your node, and this is your only item on the cost side. Again, on X1, a big differentiator is that in contrast to Solana, validators don't pay for the votes on the leader proposal blocks. So you only pay for the server about $5 to $7 per day, and thus mitigate having thousands of dollars in cash flow expenses that not only creates a downward pressure on the price, but also drastically limits the validator set size, and then also circumvent the force to offset those costs with the necessity of high staking requirements. So I recommend you watch my video dedicated to this only, validator financial, where I break down in detail how this works and how we manage to mitigate that. You have a link in the description. By voting on the proposed blocks by the leader, you earn credits which are exchanged to inflation, and as a leader you get part of these block rewards. So when a user transacts on the chain, they pay base and priority fees, and they go to this bucket as well as through burn. I also made an animation of this to show how the flows are moving, and what we clearly can see here is that what it essentially comes down to is balancing inflation and deflation in this economy. So while the inflation schedule is fixed starting at 8% and set to target 1.5%, we can adjust the deflation over time, which is a factor of demand through usage of the chain, by adjusting the fee burn percentages from both the base fees and the priority fees. We will initially set these to 50% for base and also 50% for priority fees. Priority fees are not showing deflation in this animation, but you can imagine a cute little line going here from the priority fees to the deflation box. But here you can also clearly see that your self-stake and delegated stake earns inflation, and this together with your block rewards is your accrued profitability subtracted by the server cost that you have, and also that the stake rate affects your block production eligibility together with adequate performance and randomness through the anti-collusion protocol. In a more stripped down version of this, we can see the cost side is minimized and you have multiple revenue flows on the revenue side. You have voting rewards, which are credits exchanged from inflation. The commission is really a built-in word-of-mouth marketing machine for the chain. You as an individual validator is directly incentivized to spread the word of X1 and have your local community delegate to just your validator, since you now get a customizable commission on your delegations. So your first customer is really the X1 treasury itself, through the X1 stake delegation program. As we roll out the token distribution, which will take many years, the funds that we are not using in the short term gets delegated to eligible validators, and you can collect those juicy commissions. In the next chapter, I will crunch exactly how that program works. On top of all of that, our ACP anti-collusion protocol will democratize access to the block rewards, so not only top stakers will be eligible, but randomness makes sure that everyone gets a slice of that pie. So if you think about it, yes, staking is securing the network and should be heavily incentivized, but not not at the expense of centralizing the network. More than stake-heavy nodes are more than capable of being leader and should get a slice of that pie. Otherwise, we end up with an oligarchical network where the one with the most funds not only wins but accelerates the winning. On X1, anyone can join permissionlessly, without KYC, with minimal technical and financial barriers, and also partake in the fees generated by all users, made possible by all validators. And on top of that, we also have the bootstrap bonus and incentivized testnets rewards, which I will talk more about, but you can read about this ASAP in the Git book right here, where we discuss how we are achieving this with VRF. And here under validator rewards, you can read about all these incentives as a validator. And let's talk about incentivized testnet rewards. So big shout out to the X1 validator army who actively during the past year have participated in the construction of X1. Your participation have been rewarded with this incentivized testnet program. So 50,000 credits equal 1 XNT, and you did get 10% airdrop at Genesis, allowing you to stake to your validator, now earning yield. The 90% are also accruing yield, being directed to the X1 stake delegation program, of which you will be able to claim after 365 days. And as for the bootstrap bonus, commonly referred to as the boobs, we already have about more than 70% of Solana's validator set size after less than 1 month of first phase of Mainnet, but we do want to accelerate the growth of the set, and we do this with the bootstrap bonus. And it's with a time dynamic program that for eligible validators are to receive extra rewards for participation. So currently the inflation schedule dictates 8% APY, but with this program expected to launch already this year, you will get another 16% on top of that, so 24% in total. Also given by this page is that there are criteria to fulfill. There's a self-stake range and there's performance criteria in order to be eligible. There's a purpose to this program, and it's especially to grow the validator set in a qualitative way, and that's why we keep it dynamic and might update the qualifications and structure of the bonus as we go along, so we can remain agile to the growth patterns exposed with time. And as we write here, the first DeFi protocol of X1 is not the DEX or a lending market, it's the bootstrap bonus. By making validation itself the first yield-bearing activity, X1 aligns incentives directly with the security and decentralization of the chain. And this is what truly sets X1 apart from most other blockchains, the ambition to let everyone participate at the core of the network, not just at the edge. Validators on X1 can participate in consensus with minimal barriers and also participate in block production as well. So validation becomes the first DeFi of X1. No other chain thinks like this. In their network, you are the consumer. The validator sets have high walls to overcome only to participate in what is supposed to be permissionless open networks. There's a demand for people to participate at the core of the chain, and we serve to provide them with this opportunity. Hashtag no homo. So, and here you also have instructions how to secure your validator with a hardware wallet, and I highly recommend everyone to do this because you don't want to do all of this work and then have some stupid hexagon steal all your rewards. So guys, go to x1.xyz and click here on the Telegram and join the X1 validator army today and start creating your validator and participate in the network. Alright, so let's talk a little bit about X1 stake delegation program. So if you go to x1.xyz and press delegation right here. Now, the X1 stake delegation program is how the X1 Foundation transforms idle treasury capital into decentralizing power. So it automatically delegates stake to high-performing validators with no KYC, no manual applications, ensuring that rewards flow to those securing the network in the correct way. Essentially, the X1 Foundation controls the treasury, holding tokens yet to be distributed in various ways over the years, and while that's the case, they are being put to work by being delegated to the validator set. And this is all being done automatically by the delegation bot. You do not have to apply. You can disregard this button here. This is a legacy mechanism from Solana, but we do not KYC. We don't believe in KYC. All you need to do to qualify, make sure you meet these criteria in order to receive your delegations. Currently, these are the criteria. You have to be active, but we do allow some unavoidable downtime quantified by vote credits accumulated and max skip rate. There's min and max staking requirements, and you have to run the latest latest tachyon version. In this list, you can see if your validator meets the criteria or not. Here we can see that one validator has too high skip rate, for example, so that's going to be adjusted. And in the FAQ here, you can read all about how this delegation works, but I will break down the main schematics for you right now. This is an overview of how the program actually works. An XNT holder can also stake into the program itself, alternatively stake into an individual validator directly, of course. And this is essentially what the X1 Foundation does with the treasury by simply staking it into the delegation program. And there are some fees associated with that in order to mitigate manipulation in various ways. The delegation bot delegates stake to eligible validators, of which are being adjusted every 24-hour epoch. As the validator generates rewards from inflation, those are then distributed, first by the validator set commission, and a 4% epoch fee is taken by the delegation bot in order to maintain its operation. But this is the net after validator commission, and the rest then goes to the delegator. And the delegation bot automatically adjusts the eligible validators during an epoch based on the performance metrics and criteria and rebalances the stake. The delegation bot also have mechanisms to ensure that no single node receives too much stake. So if you have more than 1% of the total network, you're disqualified. And also within the portion being allocated, you cannot exceed 1% of this total. But before that, the program also have an allocation strategy with a weighted distribution. So 30% of the funds are equally split between eligible validators, and 70% is dedicated to one-to-one match the validator's self-stake. We also have a dashboard summarizing the metrics involved. So when depositing, you receive an LST called PXNT, which symbolizes your share of the pool. So when withdrawing PXNT, it gets burned, which explains the discrepancy in supply of XNT versus PXNT following a ratio in between them. The fee structure is here, as I mentioned. You also have some validator statistics, the delegation criteria, the allocation strategy, and the addresses associated. The X1 stake delegation program works very well already, but we are actively working on getting it to work 100%, and we will adjust these criteria and mechanisms in all perpetuity to make sure we fill our objectives here. We are currently activating more and more of the X1 Foundation treasury funds into this program, so just make sure that you fill these criteria, and automatically you will receive delegations, of which you earn a commission of course. And big recent news, of course, is that we recently acquired XTEX by Jason Forte. It's a fork of Radium and X1 enshrined liquidity layer within the X1 runtime using SVM for sub-second swaps. So we now have a native on-chain exchange layer that merges liquidity, staking, and creator markets. Now, X1 is a permissionless blockchain allowing anyone to build and deploy dApps, and we welcome anyone to contribute even for that infrastructure level applications. There's definitely pros and cons for our team to develop primarily a DEX and a wallet natively. The part of the reasoning for us to do so is based on our experience with the existing applications as such on Solana today. As an example, in order to place an order with high probability of succeeding in a highly congested environment, in let's say a popular token launch, a user needs to be able to set a priority fee correctly for having a chance of inclusion. The problem in existing DEXs and wallets UI as we see today is that they're subpar in letting the user to do so. So instead, what the user does is up the slippage to 25, 50, 75% or even more just to be able to capture that token before the price moves. The MEV bots will see that action and directly capture all that slippage spread by prioritizing inclusion of just that high slippage trade, which could have been completely or partially avoided by correctly setting a correct priority fee in the first place. So something we will actively work on is to iterate this user experience and get the correct chain information for the user of current congestion, and making it easier to set the optimal priority fee for maximal probability of transaction inclusion. And this is just an early iteration of this feature that we will work on extensively going forward. Again, what we also have on the roadmap is to ensure quality of service by allocating dedicated threads for peer-to-peer and stablecoin transfers, which we consider key for our core value proposition of peer-to-peer value exchange. So XTEX will be deployed on both X1 and Solana, and it will have swap to earn features, liquidity pool management, farming, staking, validator stake, a light wallet, and a portfolio page pretty much very soon, like within 2 weeks or something like that. And we also have Degen that is developed by Jason as well, a creator launchpad with bonding curve launches, lock liquidity, ongoing creator earnings, so-called mailbox money. There's a feed function, shield boards, and a full XDEX integration. So a lot of juicy stuff right there. And more things on the roadmap includes a fully featured wallet for the X1 ecosystem. Jason is also working on a project called Core, which is an on-chain rewards layer that converts all the ecosystem activity into XNT yield. We will have lending and vaults, a native lending markets and vault liquidity system with collateralized assets. We're experimenting with perpetuals, on-chain perps with leverage and margin trading built directly into X1. And we're working on getting backpacks supporting X1, so make some noise in their feeds, guys. So we're very happy to have Jason hired at X1 Labs as ecosystem co-founder to help us grow this ecosystem. We were impressed by his dedication, his mindset, and his very hard work. So big shout out to Jason. We're very happy to have you on board. There will be many updates on these things going forward, so stay tuned, as I say. Now let's talk a little bit about bridging. X1 is currently an isolated island. We need a bridge to connect to the other chains and become interoperable. And primarily what needs to be integrated is a bridge between X1 and Solana. And we're evaluating the most optimal configurations with projects like Wormhole and Layer 0, and also SVM specific solutions like SBridge. But we do also look into simple native solutions that we can safely and efficiently do ourselves at this early stage. And the first step in the short term is to be able to bridge USDC on Solana through conversion into XNT on X1. And we enable this with the X1 cross-chain swap bridge, which lets users deposit USDC on Solana and receive XNT on X1. Right now, the only way to get XNT is through OTC deals with other validators. So it's high priority to enable anyone very easily to acquire XNT in order to primarily, at this point, scale your validator operations. The X1 bridge is a cross-chain swap between Solana and X1. So you deposit USDC on Solana, Guardians verify that transfer, and XNT is released on X1, which becomes instantly usable for staking and delegation. And this is the safest and simplest path for value to flow into the X1 economy at this stage. And the architecture is a modern monobridge design, listeners, guardians, and submitters built with Redis queue system for event consistency. The cross-chain swap bridge connects the two chains, Solana with USDC on its side and X1 with XNT on its side, without minting synthetic assets. Instead, it performs a verified swap. A user deposits USDC on Solana, and then the system releases XNT from an escrow vault on X1. Each side is controlled by a squad's multisig that owns the respective token accounts. The middle layer, coordinator, bridge guardian, and transaction submitter handles the event verification, the signing, and transaction relay between the two networks. So in other words, on the Solana side, the user deposits USDC, the token program emits an event, the guardians pick it up, the coordinator layer aggregates the signatures and builds a verified checkpoint, and on the X1 side, verified message triggers an escrow program which releases XNT from the vault to the users. And we can also have the reverse direction, which is the same process mirrored back for redemptions. So this will be an historic event where X1 becomes interoperable for the first time, so stay tuned for that. And of course, we also need an oracle. We're doing some oracle implementations. The X1 oracle network embeds real-time market data into every block. We have 3 relays, 2 confirmations, half a second precision. The X1 oracle is a standalone data network built for speed and simplicity. We have 3 relays that read live market data from Pyth every half a second, sign it, and write it directly into each X1 block. So every X1 block embeds real-time market data. We have 3 independent relays. They fetch prices from the Pyth network. They verify the consistency. They sign them and broadcast updates into the chain every half a second. So every 500 milliseconds, we have new aggregated prices. Every slot contains real-time market prices for, in this case, Bitcoin, Ethereum, and Solana in this prototype, allowing any contract to settle instantly. So since data is stored directly into the block slot, any smart contract or explorer can then read verified prices instantly. There's no consensus delay, there's just numbers verified by signatures. The relays are staggered by 200 milliseconds that ensures that one is always ahead and no single relay blocks updates. 2 matching signatures out of 3 are enough for the updates to be accepted, and this is the heartbeat of X1's data layer, that truth is embedded into every block twice per second. The source of truth is Pith network, as we mentioned, and that provides an off-chain aggregated pricing for both crypto but also equities. The Oracle network is really the baby of X1's real-time data layer. We're streaming global market prices directly into every block, and this is what allows X1 to host things such as synthetic assets, prediction markets, and perpetuals without having to import external liquidity to the chain. And now that we have an Oracle, we open up for very interesting use cases such as prediction markets, which Jack here is currently experimenting with. Guys, look at this guy. Completely degenerate at the brink of retardation. Here's the math behind this prediction market. Guys, to be honest, I have no idea what this math reads. I got to the first parenthesis there and I went and then did something else. But what I do know is that prediction markets is very interesting. And the best showcase for that is probably Polymarket, who predicted the last US election better than any other prediction institute. We are very used to speculate on crypto prices, but speculating on real world outcomes just opens up a whole new world of interesting dynamics. So an X1 prediction market can turn pure information into tradable value. So instead of buying tokens, a user trade probabilities, yes or no, binary outcomes, or any event that can be verified by data. And X1 prediction markets let you trade the future, not tokens. This is built with the LMSR algorithm, which no one on Solana is using today. Each market prices probability itself. You're essentially not buying tokens, you're buying conviction. If you think that Bitcoin ends above a certain amount, you then buy yes, and if you disagree, you sell, and the curve adjusts instantly. So imagine you have a vault with 0 coins and then a betting market. So if you have 2 players, player A then buys shares for 50 cents, B comes later and then spends 70 cents. Player A have more shares because it costs less per share. Now, if both win, A get more money back because he has more shares, because it's prorated per shares. Every market settles in XNT using real-time Oracle data. It can be crypto, it can be stocks, or anything measurable. And this is decentralized prediction at chain speed on the information data layer of X1. And in this test simulation run with 5 users trading yes or no outcomes, every trade then updates pool prices dynamically with the LMSR cost curve. And here we can see a simple demo of how it actually works. The market is tracking the price of BTC, which is currently 113,432. We have a settlement in a few minutes here, so I'm going to go ahead and buy an up share because I think that Bitcoin is going to move within the next few minutes. And I'm now getting a share of that up pool. Now, some key features to discuss here is that there's no underlying assets needed. All trading is on information, not tokens. And this is great for us as a chain early on when the liquidity expected to be low. So we can get a lot of transactions by apps like these and get those sweet, juicy birds going. There's also instant liquidity. The AMM always quotes both sides, so there's no need for a counterparty. There's a continuous market. Positions can be opened, sold, or closed anytime before resolution. In terms of composability, anyone can build custom prediction markets using the same engine for sports or for crypto or for stocks or weather or gas prices. There's a revenue sharing module embedded, so markets created through this SDK automatically share a fee revenue with the deployers, so builders get so-called mailbox money. There's on-chain finality. The Oracle price at expiry is the settlement of truth. And how the Oracle integrates is that the Oracle updates every 0.5 seconds, so it feeds the latest prices into each prediction contract. The market resolution is deterministic, which means that the last valid Oracle price at expiry decides the outcome. For example, if Bitcoin is above 113,400 at close, the yes side wins. The payouts is then executed in XNT. The Oracle makes it possible to create markets for any measurable variable. It can be crypto stocks or even Ethereum gas prices or any real-world event that have an on-chain verified outcome. And the economic role of this is, of course, that prediction markets drive transaction volume and fee burn. Users pay a small trading fee. There's no speculative token inflation. It's just pure information. And it adds another real yield layer to X1's DeFi stack. So prediction markets is something very interesting and that we can have a lot of fun with early on X1. Now I want to finish off by giving a big shout out to the whole X1 validator army. You're absolutely lethal in your agility. Also the builders who are on the fences ready to go. Can't wait to see and play with your dApps once we continue this phased rollout of Mainnet. As you can see, we have a lot of things we're working on in parallel here, and we will continue to give you continuous updates as we go along. Once we have the main infrastructure set, we can continue with the liquidity event on Solana, and of course we haven't forgotten about all you Xenians, Hasheds and Vampires. Big shout out also to Simple Waters and Rome holding it down in Crazy Town of X. Guys, keep on validating, keep on building, keep on fighting. We still don't give a flying fuck what you say, but it is entertaining. Keep on being completely degenerate and retarded, and see you in the chat.
Machines scream. Wow. Eating up megabytes, gigabytes, terabytes, all of them bytes. Excuse me, is your mind right? Excuse me, is your mind right? Upload, download. What you getting into? What you getting into? Wow. Loading. Loading. Make machines scream. What you getting into? Download everything that you want. Download everything that you want. What you getting into? Surfing on the internet. What you getting into? What you getting into? Wow. Make machines scream. What you getting into?